At the beginning of the year, we interviewed Malcolm Graham-Wood from Hydrocarbon Capital, and he gave us 14 stocks that he was watching, which he said was his bucket list for the year of oil stocks to hold. Well, Malcolm joins us now with an update on where things are as at the beginning of September. Malcolm, good to see you again, and what a performance it's been for your bucket list. First of all, why did you put this bucket list together?
Well, the bucket list was actually put together. I was asked by somebody who's not an expert in the oil and gas field, thought the oil price last year was very, very low and it wouldn't stay the same. Try and choose a dozen, and turned out to be 14 stocks where you had a bit of excitement, but generally you had to tick a number of boxes: good quality management, well financed, so they didn't need to come to the market for money, a good portfolio of acreage with a bit of upside. The idea was that we might lose 2 or 3 on the way, and 3 or 4 might do very well, and the rest would be in line.
Okay, let's take a look at that list of the 14 stocks. Here we are, as I say, now at the beginning of September, and I think we've got a couple of stocks here that have gained over 300%. We're talking Ithaca Energy and Sound Energy. Of the others, we've got a couple of 200% gainers. We've got Hurricane Energy and Premier Oil in that list as well. And in fact, so far as I'm aware, you just have one stock that has lost money in this period, and that's just a 4% drop for Far Limited. Explain what's been going on.
Well, to a certain extent, we've been a bit lucky because the oil price almost at the bottom when I put this out in January. So the oil price was 27, and that's at one stage in the year it had almost doubled. You know, back in the summer it was 50 odd, just over 50 for Brent. That's been all over the place. But the bottom line is that out of those 4, which are up more than 200% each, one is Sound, which we've talked about a number of times here. They've got a fantastic program onshore Morocco, and they've had a big find. So they've had a big gas discovery. Now the point is if this gas discovery stays as we thought it would, it could be significantly bigger than this. So this is no time to just jump out of 1 or 2 stocks just because they've done well. And Ithaca is probably the best managed company in the sector, and this was waiting for a rig which was being completed in a yard in Poland. I actually went to visit this back in the spring and saw this fantastic rig almost complete, so I was able to be happy with my recommendation. It is now on site in the stellar area of the North Sea and will be producing oil by November. So that's done very well. The other 2 big winners are Hurricane, and Hurricane had a huge financing. The Keragen Capital, which is a Chinese or Hong Kong-based company, invested $50 million back in the spring, and that meant that Hurricane was able to do 2 things. First of all, it didn't have to go cap in hand to try and farm out its acreage. And the second thing is the 50 million paid for more than to the 2 wells. So it's already spudded the first well. It's on site and drilling at the moment. So things have been brought forward a year or 2 for Hurricane, which is great news. And I'm obviously glad that I recommended it, but I always thought it would do well. And we'll see how those 2 wells do towards the end of the year. And the other big one, which is Premier Oil. This was a big call back in February because it's got a very substantial debt, a mountain as they call it, $2 billion of debt or more. But the point is what they've done since that time, and the shares have gone from just under 30p to 70 odd p in the meantime, and they've managed their way out of this very well indeed. So their production has been better than expected. They've beat guidance every single time. They've done a small acquisition, which is the Eon acreage in the North Sea, not only coming in with bigger production than expected, but costs are being taken out of there. That was a great thing to take out a big company where costs were far too high. So they've done very well, and we're sort of on the verge of having a renegotiation of that debt. So Premier, it's not surprising it's done well. But that credit is due there to the management.
Let's talk about some of the other stocks as well, just on the periphery. Pantheon Resources, I think we were talking about this beginning of the year because it did so well last year. I think was it the first or second best performer on AIM?
It was the best performer last year, 600 or 700% up last year on AIM. 2 huge discoveries in East Texas.
Do you think this has the potential to? I mean, the chart looks pretty impressive this year, but in fact, it is a 75% gain on from the stock price. What's the potential for this the rest of the year?
Well, the potential potential will happen in the next few days. They're drilling a well in Texas at this very moment, and you'll see on the chart that 140 is usually a level at which it holds very nicely. All will depend on this well, which is being drilled at the moment. You can never say on an exploration well, but it's going to be a success. But they've had success before in the same sort of thing. I wouldn't be at all surprised to see this well coming in and Pantheon going a lot better again.
Yeah, okay, that's one of the other stocks. The other one that's close by is Tullow Oil in terms of its percentage gain at 53% this year. This is probably one of the biggest stocks, if not, Premier and Tullow, I think probably one of the biggest stocks you've got in this index.
Yeah, Tullow was the really big call actually on this on the bucket list. It hadn't been in before, but it came in here. I considered that Tullow, the management of Tullow had done all the right things. They'd realised very early that they needed to cut back costs, try and reduce debt, and slim down the business. The other thing is that they, apart from their big Jubilee production in Ghana, they've got a thing called TEN, which they spent the last 3 or 4 years putting a huge amount of capital into. It came on stream a few weeks ago, and now that means that the capex bill for Tullow is going down and the income is going up. So I think that it was a brave call, I guess, but I believed that the management when they told me what was going to happen, and there we go, we're lucky.
Yeah, we've got to talk about FAR. This is the only one that has given you a negative reading year to date. Why? What's happened with FAR?
Well, I'm really happy with FAR at the moment, and FAR you should look at Cairn, which in itself has been up sort of 30 or 40%. That's exactly the same discovery offshore Senegal. The difference is that FAR, which is an Australian quoted stock, and it's got, for its size, it packs a much bigger punch than Cairn because it's got a bigger stake in compared to what it's got in the rest of the business. That is the business. The reason it's down at the moment is that Conoco decided to exit all their international offshore exploration. So they put their stake in this field up for sale, and it was bought by Woodside, but FAR in the process of trying to preempt. All the other partners were allowed to preempt, so Cairn could have preempted but decided against it. FAR would love to, but of course it's too small. So I think at the moment what's happening at FAR is that they are in the process of trying to make sure they can preempt and see if they can get a wealthier company or a private equity firm to come in with them to do it. When that happens, there's lots of upside. The shares are 7.5 cents. I've got a value of 25 cents in for FAR, so I'm pretty confident that won't be my biggest problem come next spring.
That is way off the top of the chart. I mean, that would take it up enormously.
Yeah.
I mean, that's wishful thinking. I mean,
it is a bit at the moment, but the point is, it's a big discovery. FAR have announced this morning that it is now a commercial discovery, so it's going to go ahead. Whether it's with Woodside and Cairn or whether they take a bigger stake, but even with the stake they've got, there's massive upside.
Yeah, you said at the beginning some credit has to be given to the price of oil.
Yeah.
Let's just quickly wrap this up and take a look at where we are in terms of Brent, which is what you mentioned. It has been above 50 in the last couple of months or so. And of course, we've got to remind ourselves that this was about half the price it is at the moment at the beginning of the year. I think if you'd bought at the same time your bucket list was published on the 1st of January, I think if you bought and hold, Brent was up about 22% I think to date. But you've got this list up 101%. So obviously you've outperformed Brent. Where do you see the price of oil going?
Well, I think that the reason for my positive stance on the oil price at the beginning of the year was that the worst was behind us, but we had a difficult year to go through in 2016 because of literally the fundamentals. There's still too much oil around compared to the demand. International growth numbers have been brought down during the year very much, but I still felt that we probably have 1.5 million barrels a day or so of demand which creeps into the system whatever happens, and that by the end of the year things would start looking better. So I had $60 a barrel penciled in for the end of the year as a year-end price, not an average. I'm probably a touch high at the moment, but we've had, as you can see from the chart, we've had ups and downs. At the moment, August was a very good month because people are believing the story that there's going to be an emergency OPEC meeting in Algeria at the end of this month. But on the back of that, OPEC is producing flat to the boards at the moment, and we had poor inventory figures this morning or overnight last night from the US. So there's a lot of crude around still. I still think the longer term, next year and the year after, things are looking good because so much capex, has been taken off the market that big projects that we're expecting next year and the year after won't come on stream. So I'm still pretty positive. I try not to meddle with the bucket list too much. I'll have a look at it after Christmas and see what it looks like. But in the meantime, stay with the haves rather than the have-nots, because despite all the things that we look at here with all the plus signs here, there's probably a list of 8 or 10 stocks which have not made it through this year. So if the oil sector has haves and have-nots, stay with the haves.
Yeah, look, it's a pleasure. Thanks indeed for joining us. Malcolm Graham-Wood there from Hydrocarbon Capital with his look as an update on his bucket list for 2016.